Today's podcast is supported by TRM. TRM enables compliance teams to accelerate business revenue and deliver actionable intelligence to regulatory and law enforcement stakeholders with leading attribution of severe risk categories. Request a free trial today at trmlabs.com. I'm Elaine Dezenski, and this is Coercive Capital on the Illicit Edge Network. More than 2 decades after the tragic events of 9/11, when 19 hijackers used falsified identity documents to board planes, U.S. travelers over the age of 18 will now be required to present a Real ID-compliant form of identification to board an aircraft or access certain types of federal facilities. It's been a long time coming. If you've renewed your driver's license in the past few years, you're probably familiar with Real ID. Meanwhile, the evolution and modernization of how we manage and protect identity has moved into a new era. Identity verification, of course, is at the core of Know Your Customer requirements, and it's why financial service providers are a key stakeholder in the evolution of digital identity. This episode is a must-listen for anyone who is interested in understanding the evolution and implications of digital identity. Amit Sharma is founder and CEO of FinClusive, a fintech firm and digital financial services platform that uses blockchain technology, advanced analytics, and standards-based risk and compliance tools to advance financial inclusion. Amit previously co-founded Empowerment Capital, a strategic advisory and impact investment company, and served in senior roles at the U.S. Department of Treasury, including the Office of Terrorism and Financial Intelligence. We recently spoke about the concept of sovereign ownership of identity and the integrity of personal data as a fundamental human right. I wanted to just get started with your take on this connection between identity management and national security. I know it's something you've been thinking about for a long time. Can you walk us through kind of your own thought process on why identity management is such a critical part of what you do, both in your work at FinClusive, but also, over the years as you've been developing some really interesting approaches to how to improve compliance in the financial services industry?
Absolutely. If I take myself back to the inception of terrorism financial intelligence at the U.S. Treasury Department, where I got my start, where we were developing tools right after the awful events of September 2001, where we realized the financial and commercial systems were exploited by bad guys. And so all of the anti-money laundering, financial crimes compliance obligations that we grew over that time for regulated financial institutions, banks, trust companies, deposit institutions, payment services, and then the expansive non-bank sector, right? And then you fast forward, who does it apply to? Financial technology companies, banking as a service, crowdfunding, institutional finance. At the crux of what we were doing was really asking institutions that were providing critical access to payment rails, business loans, lending and credit services to know who their customers were. So at the crux of anti-money laundering and financial crimes compliance is, do you know your customer? At the crux of do you know your customer is identity. Can I verify and validate who Elaine is? Can I understand that the account that she has belongs to her? Can I understand that the payment that I'm conferring is for the purpose explicit and is going to go to the account intended? These are all identity questions. Now, fast forward, and I get very passionate about this largely because what gets a lot of people passionate, from the moment they have kids, the whole world shifts. And my children at 17 and 10 years old do not know the world without the internet, do not know a world without social media, with engagements on a digital device and a smartphone. I mean, everything from how they submit assignments in their classes, to how they coordinate rides for their sporting events, to how they engage with critical services across the community is increasingly week on week, month on month, year on year, digitally accessible. And are we enabling the very critical protections of our digital selves in an online world? Now the two come together. If we are trying to ensure that we know who our customers are as a regulated financial service company, bank, non-bank alike, we have to understand what our identities are in an increasingly digitally native world where I access those services online. My digital identity now becomes sacrosanct. And we are now in a place where how we reveal ourselves online and how we verify and validate ourselves online and how we share bona fide information of ourselves online so that we can be paid, payroll payment to thank you for lunch, Elaine. Here's $20 in your account, to digital asset services. All of these pieces require at the core, do I know who I am and who I'm transacting with? And the digital representation of that now becomes huge with the impacts of cross-border internet economies that know no jurisdictional boundaries. Digital identity and the verification and validation of oneself, and the ability to track and trace bad people and ne'er-do-wells working to exploit that, is an identity problem at the core. That's why I'm passionate about it.
Yep. So so what you've laid out is fascinating, and we're going to dig into that in a lot more detail. But I want to talk about something that's happening real time, which is the implementation of the Real ID Act, which, as you know, is based on legislation that was passed in, I think it was 2005, based on the 9/11 recommendations, because we know that the hijackers of 9/11 had many forms of false identification that they used to access airplanes and corrupt our system and cause a massive amount of harm. But it's been literally 20 years, actually a little bit longer than that, since the passage of that legislation. And in May, the Real ID requirements, which standardize security features across all states, will finally go into effect. With some exceptions, there's actually another 2-year implementation timeframe. So at the same time that we have some really advanced architecture and technology driving this conversation around digital identity, we're still struggling with the implementation of Real ID, which was based on a framework from a generation ago. So how do we square this? And can you talk a little bit about, the context of Real ID and where that leaves us right now in its implementation, but also where we need to go in terms of a broader digital identity management frame?
So there's a couple of things to unpack there as relates to Real ID, as relates to the security elements in a post September 2001 context that then spurred the legislation vis-a-vis a Real ID that came out in 2005, and the ability to better secure what effectively are paper-based hard form ID. Therein lies the first problem set, right? Is that Real ID, as conceived of, was to ensure the appropriate, among other things, the appropriate protections in your physical identity card that was predominantly through a driver's license issued by a state authority. So there are a whole host of challenges to Real ID that get into state versus federal authority. And I'm not a constitutional law or federal and state lawyer, but tracking those closely. But there are a number of legitimate questions around state-based authorities, federal-based authorities. That said, the broader idea of ensuring that the document verification validation process was not easily exploitable through fraudulent hard form ID is really the underlying motivator for Real ID in the first place. And then you have to contend with both technology, capability, mechanics, as well as issuance of those identities that ultimately are overseen by a federal program and executed by the states. The underlying challenge with that is that the world has evolved much faster in the digital context than paper-based forms of ID, and paper-based forms of ID are increasingly year on year being just that much more obsolete in nature. A, because of the fraud and exploitation elements associated with it. B, there are over 1 billion people on the planet today that are born without identity, without any form of identification. And we here in the US, win the postal code lottery contest, we get this identity, we get a social security number or a tax ID or equivalent. We don't have those challenges. So how do you even address paper forms of ID to those that are born without any form of identification at all? And then finally, we have leapfrogged by way of technology in some of the most remote and emerging markets on the planet. You have cell phone penetration rates and smartphone penetration rates of 90-95+%. That wasn't the case 10 years ago. So paper forms of ID then have now translated to real ID and other forms of sort of evolution and modernization that, quite frankly, are missing the mark vis-a-vis a digital economy. Now, how do we think about this in the digital economy? Today, to your point, we have architecture, we have technology that now enables us to have identity in digital forms that, and this is the third and probably the most important piece of this, is owner controlled. And right now across the world, and certainly if we look at Real ID, if we look at the concept around security for Real ID and federal and state mandates, this is government saying we will enable a specific trusted form of ID that then anointed intermediaries, in this context, financial services companies, banks, will then verify and validate that you are legitimately who you are through a paper form of ID. That in and of itself is antiquated. And in addition, you still don't own your ID. The issuer of that credential, if you will, to get a bank account is effectively saying, Elaine, I can verify and validate that you are a person, and I can verify and validate through know your customer and background due diligence and your SSN check, your social security number check, your OFAC designation. Are you on the OFAC list? your email, your selfie, your liveness, all these things that can be fraudulently spoofed in some way. They are now the effectively regulated party, the anointed intermediary that verifies and validates you. And then they own and control that underlying data. So if we think about personal data rights as a human right, which is the ethos that needs to change, now in a digital context, we have technology that not only enables the ability to verify and validate you using a number of non-traditional ways of validation in a digital context, but also we have to move back to the concept of you, Elaine, owning your persona, owning your identity. And right now, legally, in many regulated industries like banking and finance, you don't. It's owned by the financial services company. And that is the ethos that needs to change alongside the technological change.
Okay, so if we're moving from a paper-based process, which means I present my birth certificate, I present my social security card, I present my passport in order to obtain another form of ID, how is a digital identification constructed? What does that look like?
Yeah, so there's a number of different things that we can do in that context. So digital representations can equally be spoofed and fraudulently manipulated and the like. So then the question is, how do you create a proofing mechanism that verifies and validates the bona fide underlying information and ensuring prior to that the underlying information is in fact valid? And that's where the dependency comes on your passport or your driver's license and the like. But now in the digital context, we can create a credential, a code effectively that represents a number of underlying attestable attributes about you. Your selfie and liveness, your biometric, your email, your address, your social security number. These are all attestable attributes that point to you. Well, guess what else we can do? We can utilize your social connections. You can use your affiliations. All of these are additional proof points that showcase that Elaine is Elaine. I can take Amit's social security number, David's selfie, so-and-so's liveness, so-and-so's email address, all real pieces, fuse them together and create a synthetic ID. But if I now present that to say, well, this synthetic ID, Elaine was never married to Amit. Why is that affiliation there, right? I can create all other sorts of attestable attributes that form that underlying code or credential. And then thirdly, it's the manner in which sharing. And this is where there's still a lot of work to be done. How do I take a credential, an essential code, and securely enable the sharing of that to a third-party verifier, like another bank, like a payments processor, like a card company, whomever, to then say, I can trust that the code that came over to me is valid and the underlying bona fide information is true. And this is where concepts like zero knowledge proofs and other technological applications in the use of credentialing and trust frameworks, and these are evolving over time, and not any of them is a panacea, but this is the evolution that's happening. But today we have technology to verify and validate you in a digital context, create effectively a credential that can be owned and user controlled, enable that user to share that credential in a secure way, and the ability to verify and validate that the underlying information associated with that credential is up to date, true, and verified to the extent that it unlocks certain information. So those are the core components as we think about it. And like I said, these are evolving pieces vis-a-vis the technology, but those are the core components.
Okay, so I want to go back to this question about the elements of digital identity. Who sets the standards around that frame? Who drives this architecture? Is this coming from the private sector? Is it coming from the public sector? Somewhere in the middle? Um, can you explain a little bit of that to help people understand where we are in this process of defining digital identity as a standard?
Yeah, no, it's a great question, and those processes are still being borne out, and it's a combination of both private sector innovations and engagements and governance standards alongside public sector. Um, if I just back up a half a second, we're talking about effectively credentialing in the open web, right? And when the internet was founded, the idea was much more let's enable information to be both produced and consumable online. And then web 2, that was web 1, be able to sort of look at information, curated information in a digital form. Web 2 is, can I write that information to the web for others to consume? And I'm being very rudimentary about my description. Web 3 now gets into the context of I can create infrastructure on the web that others can be enabling their services. And this is where digital identity credentials can sort of come. So if I look at the open web, it was early days. If we had to do it over again, we could look at what are the responsibilities of content creators on the web, and then curators of that information and consumers of that information in terms of the shareability of it. And we did not create the appropriate guardrails at that time when the internet was really formed. Now we're revisiting that, and the whole idea of sovereign ownership of identity has come, because today now we have, again, anointed intermediaries. The Facebooks and Googles and Apples give access to the web. They charge you rent if you want to sell an app in the App Store. You pay Apple to do that. You pay Amazon to do things. You pay Google to do things. But now in Web3 and beyond, you don't have to pay these intermediaries. You can actually provide actual infrastructure on the web yourself and effectively enable a broader piece. So we, from an internet governance perspective, we are now finally having a conversation, and arguably in the last 2 to 3 years, around internet governance around personal data. So that's number one. Secondly, when we think about this in the context of data interoperability cross borders, now you get into national standards for data privacy, data at rest. So the NIST standards that the Department of Commerce and others are sort of really pushing forward plays a central role. How do we think about data from the standpoint of who owns it, who is obligated to protect it? How do we ensure that personal data gets back to the owner of that personal data? Right now, we don't own our data online, and it's bought and sold by data brokers, by others to exploit that information. You don't get compensated for that. Imagine a world where you can be the determiner of whether your data is exploited for advertising or other purposes, and you get paid for it, right? But that requires this ethos shift to personal ownership of that data. So right now, the jury is still out. Data standardization, data information sharing, data at rest, and data forgetfulness, like to be able to erase data. Those pieces are still not symbiotic cross borders. There are still, in some ways, conflicting rules, but they are trying to modernize and standardize those rules across border. And that's where organizations like NIST, like Trust Over IP, like the Sovereign Identity folks, like the Web3 ID Coalition, like Open Identity Foundation, are all working to help create both interoperability, but also standardization across the board. And that's not complete yet.
Okay. So there are a lot of threads here, and I want to get to the questions around compliance and get back to some of the national security cases for this. But before we do, can you give us a sense of what the future of digital identity looks like in the next 5 to 10 years? Let's say we're moving ahead with architecture, with standardization. We find a good balance around the public-private engagement required to move forward on this new framework. What does that look like ideally? And can one opt out of the digital identity framework?
Yeah, it's a good question. So the overarching on this is as I would describe from that question is the following. In an ideal context, and I do believe we can get there. I think that the technological advancements are happening at such a pace that we can get to an ideal state. The question is going to be one of political will and governance, like most things are challenged by, right? So we have the ability to enable your full ownership of your identity today. Technologically, that's capable in an online context. The question is, how do we take what is already out in the online world and sort of bring it back to you? That's going to be very, very hard. But the technology for you to sort of own your data is there. What do I see in 5-ish years? I see a process where Amit is at the center of his identity online and his permissioning of that identity to various gatekeepers or intermediaries to unlock services. I liken it to, I walk into a bar today and they say, okay, great, I order a pint, and they ask me for ID, and look at how many forms of information are coming through that form factor of that my physical ID. They're getting my eye color, my height, where I live, my address. They need none of that information. They only need to verify and validate that I'm over a certain age. They don't need my month of birth, my day of birth. They just need that. What credentialing can do in this regard in the digital context is I can effectively use the equivalent of a QR code and say, here, I can verify and validate that the underlying bona fides of my driver's license are valid and that I am over 21. And that's the only information you get. And I can then walk out of there and be able to walk into a airport like I do today and be able to scan the QR code of my ticket, because the ticket in the wallet that belongs to me is associated with my identity and is associated with Amit's proof of personhood to be able to sit on that plane. And when I get off that plane, I can effectively permission it to the car rental agency to unlock, a vehicle for my access. And guess what? I can then pay for that because that same credential is tied to a bank account or a card that enables payment to that rental car agency. These kinds of things put the consumer, the user, back to the center. Right now, the intermediaries are at the center, and then they ask for this information over and over and over and over again. Yeah. So I believe we can get there in 5 years. I think we can get to a place where the user is back at the center of that identity. And now the question is one of governance. What enables, who has access? Is it the issuer of that identity? Is it the third-party verifier of that identity? Ultimately, I'm the holder of that identity. How do we do this also for business entities? These are the underlying questions we're trying to tackle today.
But when you say the tech is already available, that you can get into this frame of being able to own and manage your digital identity, where exactly does that reside? Is that in a financial services application? Is it in where is that right now?
There are options on that right now. So and even financial services is struggling with this today. Look, it wasn't that long ago that financial regulators said you don't have to have, in all contexts, physical records backed up of your client's data. I mean, think of the concentration risk and the exploitation of on-premises ownership of information, holding of information. And we've seen data breaches across the board, from credit rating agencies to the Office of Personnel Management. The millions of people that had top secret security clearances was disclosed, was hacked, was hackable, was sitting in honeypots. So the first piece is decentralizing that data storage, being able to cut up all of that data and send it out across tens of thousands of servers and computers, et cetera, so that the reassembly is very, very, very difficult. That decentralization capability exists today, and we can use distributed ledger technologies to be able to enable that. The second is, how do you verify, how do you enable the access to that information? And that's what we really care about in a law enforcement and regulatory context, right? If there's a bona fide investigation of Amit as part of a terrorist financing investigation, a drug case, or what have you, I want to be able to say, can I query Amit's transactions? Who does he pay? What does he pay, et cetera? We can query that because the credential can be also attached to transactions themselves. That is what I mean by that technology exists. Now, your question is apropos. It's okay, right now, legally, financial services companies are legally obligated to either hold, if not control, and have access at any given time to their underlying clients' data. Well, now they do that for, again, law enforcement and regulatory oversight purposes. But imagine where you can effectively do so without holding onto the personal identity information of that client. And the credential itself or the associated codes that point back to those attestable attributes, your accounts, your transaction data, your personal data can then be queried. And that's where there's legal and compliance obligation issues. If I'm a US entity regulated by US authorities, or if I'm a foreign entity operating in the US regulated by US authorities, there are certain rules. If I am operating in Europe, I've got GDPR, etc. But the right to forget, if I'm a financial services company and I leave that financial services company in Europe, that financial services company is obligated by law to hold on to that data for a further 5 to 7 years for, again, law enforcement and regulatory purposes. So there continues to be sort of legal and regulatory friction in terms of the data management process of this. And that's what needs to be addressed from a governance perspective, where the underlying technology is now giving us avenues for moving this forward. But the ethos still is challenging. Many in governments, especially at the federal level, not just the US, but the world over, still kind of cling on to paper forms of ID. And we need to sort of graduate from that.
Yeah. So, what opportunities then does this digitalization of identity present, more specifically in terms of combating financial fraud, illicit activities such as money laundering? I mean, we can go through a laundry list, if you will, of national security threats that are specifically related to identity management and the challenges with that. Immigration. We've talked about this. The challenge at the southern border, the immigration challenge is really one of identity management. And if we could solve for that in a more meaningful way, we would be in a very different place on that conversation around immigration. So
100%.
yeah, so let's talk about that. How do we think about digital identity as a game changer when it comes to addressing a range of national security threats? And are there opportunities for governmental bodies like, let's say, the Financial Crimes Enforcement Network at the Department of Treasury to encourage that innovation in digital identity? Because it seems like there is, there's an alignment around the potential interest in this and how it could fundamentally reshape financial crime compliance and dealing with these national security threats.
What 100% right. And I think that we are just on the cusp of that intersection between financial crimes compliance, driving a more inclusive economy, especially through digital means and an online economy, and personal privacy. That intersection is just now happening. I think that's new. Financial crimes compliance and privacy have intersected quite a bit. Financial crimes compliance and inclusive economies have intersected. All three are intersecting now. And I believe it's because for the first time, folks are realizing at regulatory levels, policymaking levels, again, not just here in the US, but all over the world. And one can argue some of the emerging markets and other places are a bit more advanced in their thinking on this and moving towards digitization, is that because cell phone and smartphone penetration rates and internet access is getting so much more pervasive, that the propensity of services that are being engaged online, that's the great unlock. That's awesome opportunity. If I can put literally the equivalent of a bank account in the pocket of someone in an emerging market that's a small business and link them to a US dollar denominated account, I would argue that that goes farther from a national security proactive approach than simply sanctioning that whole country because of ne'er-do-wells in their government or parastatals or others that all of a sudden block them from the whole dollar economy. We have the ability to extend the reach of the US dollar, the US capital markets, the US banking system through digital means, because we can effectively give folks wallets and access to accounts that access the US economy. That's awesome. And I believe that is a proactive national security toolkit that is underused, underexploited. How do we do that securely? Secure forms of digital identity. If a bank in a rural place of Kansas that has, a diaspora community in parts of Africa can engage those African diaspora in bank accounts, in lending and credit services and remittance services and the like, not only does their commercial value increase, revenues increase, but the extension of U.S. dollars and the U.S. banking economy to those markets increases as well. And that binds from a foreign direct investment perspective, from a commercial perspective, in ways that are much more emphatic than simple cutoffs and punitive measures, which has been the go-to for the U.S. government since 9/11.
Yeah,
So that's number one.
yeah, thank you. Thank you. So I just want to say this is such a powerful example of this connectivity, going from the traditional financial system into a decentralized model that could help us solve some of these questions around financial inclusion. And solving for financial inclusion helps security in a number of ways. I mean, we want people to be in a system that is safe and secure and immutable and traceable when necessary. But it's complicated to get there. So, I suppose we have to take this step by step. Um, are there any examples of where, we can see this sort of decentralized approach making wallets available, maybe in some sort of a pilot that could help, illustrate how this works and, kind of getting the model, out there as a potential path forward?
Absolutely. And there are pilots out there that need to be scaled. I'll give you two quick examples. When during the early years of COVID, a country like Venezuela that had a number of sanctions on them from the United States and elsewhere because of previous regime influences that were absolutely legitimate to be cordoned off. There were a number of doctors that couldn't get paid, that were providing COVID relief and assistance in country, and using U.S. dollar-backed digital assets like USDC, were able to put people in wallets that could transact in USDC securely to COVID clinic and healthcare practitioners in an otherwise sanctioned country where it was very hard to use traditional banking and payment mechanisms to get them paid. When in the early days of the Russian invasion into Ukraine, holy cow, 2 years ago plus, right? It's 2.5, almost 3 years. It's amazing. Within the first 48 hours, there was over 90 million in digital assets that were contributed to wallets opened by the government, that much faster than foreign aid could flow in there, that were effectively leverageable for people, outgoing refugees that had no access. They couldn't go to an ATM, they couldn't go to a bank, they couldn't access their financial value. But we were able to, with a consortium of others, securely put a KYC enabled credential into a wallet that we can then fund US dollar-backed digital assets that they could transact peer-to-peer. That's very powerful. So these are already happening. These use cases are already happening. What we need to do better is market them better, scale them better, work with more government institutions, relief agencies, organizations, and law enforcement. The funny thing about a lot of this technology within the context of distributed ledgers and blockchains and the like, without getting into a lot of the jargon, they're the same underlying technologies that make the ability to create digital forms of value, tokenized forms of value, cryptocurrencies, and the like. And yet the crypto industry does itself no favors with a lot of the lack of controls that you've seen in the fraud, leakage, waste, and the Terra Lunas and the FTXs of the world. But the underlying technology is amazing. If you talk to law enforcement, IRS criminal investigators, to FBI that are tracking and tracing those criminals using digital assets, they love it because they are working on immutable, traceable blockchains, and they can see where those transactions go. So imagine if we took cash transactions and put them digitally in ways that are traceable and immutable. So these are massive risk mitigants and massive aids in this. What we have to do is overcome the ethos in the same way the open internet in the first instances were seen as going to be a huge space for ne'er-do-well activity, and it's really unlocked a massive economy. We're doing the same thing now in the digital asset domain. So there are already a number of examples of where wallets and the extension of digital value and secure access through digital identity credentialing is already in place. What we need to do is scale them. We need to have pilots that are meaningful from an institutional perspective, and we need more governments on board.
TRM offers leading blockchain intelligence for AML compliance at financial institutions, crypto businesses, and regulatory organizations alike, with sanctioned support on 65 blockchains and coverage of more than 70 million digital assets. In a recent customer survey, 85% of users agree that TRM accelerates their work. 92% of users agree that TRM provides actionable intelligence. And 83% of users agree that TRM has provided intelligence they would not otherwise have. See for yourself why customers rave about TRM by requesting a free trial or demo at trmlabs.com. We've now kind of moved into a conversation around the blockchain and distributed ledger and making that connectivity between digital identity and this Web3 decentralized environment that you've laid out. But the reality is that there's a lot of illicit activity going on around digital assets and within these decentralized systems, and this is a problem. So, how do we get back to this idea of traceability, immutability, auditability? You mentioned that law enforcement actually loves the potential to track illicit activity within these decentralized environments. But at the same time, we have so many emerging threats around how our adversaries are using these systems to evade sanctions. So, what's missing here? What needs to be added in? How do we need to start changing our thinking, or how does the government need to be changing its approach to creating an environment that is actually secure and does not present this opportunity for a massive proliferation of illicit activity?
Yeah, no, I think that's right. I think first of all, we certainly do need to level set or contextualize the largesse of illicit activity that is known to have been perpetrated using digital assets. And if you look at a lot of the blockchain analytics that have come on from TRM Labs, from Chainalysis and the like, it truly is in the single-digit percentages of total illicit activity utilizing digital assets. Now, it gets marketed pretty emphatically. There's an assumption out there, certainly by regulators and policymakers, and I'll just say it, by the septuagenarians and octogenarians that still live in that analog world where crypto is for criminals, period. And I've been in testimony in Congress where I've had members of the House, members of the Senate say, no, crypto is only for bad. It's just categorically untrue. It's factually untrue. And in fact, the highest form, the form factor that's the highest laundered in the world is still the US dollar cash, period. And we're not getting rid of cash. And so we need to contextualize our responses to these with the data. And the data just doesn't bear out that digital assets categorically are the go-to for criminals, among other things. Don't get me wrong. Nation states like North Korea and others are utilizing these for laundering purposes. Nation states like China are leveraging blockchain, for building in surveillance tokens and monitoring activity. These are very real threats, without question. And that's where these underlying tools are there. The second is that we need to also, from a regulatory and policy and enforcement perspective, understand that some of these technologies are inherently risk mitigating. Not all tech is risk enhancing. Some of these technologies are in fact risk mitigating. And we've talked about a lot of that inherently in the conversation around digital identity. The ability to secure my own identity so that it is not exploited online, and I only permission that which I choose for access to information, has a massive positive consequence for identity management and for exploitation by bad guys. So we need to understand that underlying technology is very helpful, not hurtful in that regard. If I can create forms of transaction value, payments, peer-to-peer, institutional, payroll, remittances, supply chain, trade finance, that are traceable against the conference of a good from point A to point B, from an individual from point B to point A, I can create a smart contract that immediately moves that value on, that payment on delivery, what we call delivery versus payment, right? And that can be instantaneous. And that I don't need intermediaries, either rent seeking, taking cuts, exploiting corruption through governments where I'm paying as I go. You can actually create inherent transparency of the transaction against the counterparts and the goods and services associated for immediate settlement. That is a functional upgrade of the economic and financial system that has been since the 60s, not have that functional upgrade. And now we can do that. And so these are the things that we need to say. I would argue that the vast majority of the challenges in addressing illicit activity, leveraging these technologies, are more because of the skepticism of the underlying technology doing what it can do because of the exploitation that we've seen with FTX and other snake oil salesmen out there exploiting the system. And that is bad and wrong. But I do think that the underlying characteristics of digital assets associated with immutability, transparency, permissionability, and the like are inherently massive step function upgrades of the US economic and financial system, and arguably the international financial system. We no longer have to talk about this institutionally and trying to figure out ways to create a better system for the Wells Fargos and the Citibanks and the Deutsches and the BNPs. We can talk about this in the context of 7.5 billion people literally connecting peer-to-peer. That's the power. And we can do it in a way that creates an immutable transaction ledger that anyone can see at any given time without disclosing the private information.
And what is the role of the traditional financial services community in this transition that you've laid out?
You know, it's such an important question. And I'm an equal opportunity antagonizer, as you probably know. Look, there are stated interests for banks, core banks, and others that make a lot of money being the anointed intermediary. And when you start democratizing finance in ways that there's no one or no institution, just a simple application or lines of code separating a transaction between Amit and Elaine, banks go, wait a second, am I going to make that money? Let's be very clear. In the first iterations of using XRP in the institutional case with top tier 1 institutions, the banks didn't want to open this up. They didn't want to open this up because they get money on the float. They get money by creating a disconnect between processing and settlement times, right? And now you're saying instant settlement, where instant settlement takes away that fee. There's an economic interest for many of the larger institutions to not let this go to scale. Now, here's what's interesting. We just had a meeting, around creating trust frameworks for combating fraud in financial services and the like. And it was the tier 3, tier 4 institutions saying, look, I'm a small community bank and I've got a massive diaspora community that I want to engage in. And I don't have 200 bank secrecy officers and compliance team, and I don't have a $50 million tech budget. I need to work in a consortia. So interestingly, maybe ironically, your credit unions, your community banks love this tech because they want to enable more access to more communities, more clients, more jurisdictions, more products, and they need to be able to do it in fully digitized ways. And they want to do it where they have the regulators going, yep, you're doing the right thing. And often it's the larger institutions or others saying, hey, don't do it that way. We've never done it that way. Use our big institutions as your clearing and settlement institution, as your correspondent banking institution, because there's a massive economic interest for them to do so. Mm-hmm. And they create very deep regulatory moats so that entrants into this space are, have to spend millions and millions and millions of dollars of just getting into the space. And the technology, with a general ledger system, a user interface, some basic application to find out your personal data and diligence it, and some kind of engagement with an official payment rail, you're a bank. You're a bank. If you have those 4 components, you're a bank. Period.
Yeah. So that's a great segue into the next question I'd like to throw at you, which is recently the Consumer Financial Protection Bureau issued a final rule number 1033, which was promulgated under the Dodd-Frank Act regarding how banks must provide customer information to non-financial institutions. And this rule is related to open banking, but some banks are concerned that it may be poorly designed. Is there a role for digital identity in bridging this transition between financial institutions and fintech providers? Or is this also a potential liability or potential risk associated with data theft? What do you think about this?
I'm really glad you asked this question. I think 1033 is a great unlock. Is it perfect? No. Can it be streamlined and better? Could there be some additional, inherent security obligations built in? Are there certain things around bank versus non-bank activity that needs to be addressed? Without question. But at the crux, and remember, we worked with the CFPB early on in their notice for a proposed rulemaking around FinClusive. Yeah, no, good question. FinClusive and a number of institutions that were working within the context of Web3 ID and open identity and the like, sort of went to the CFPB and said, look, consider the use of Web3 enabled or decentralized identity and verifiable credentials. Look at this technology, because what it does is the very intent that you want. In open banking, the ability for Elaine or Amit to say, I've been banking at institution A, I can port to institution B. But the challenges that have been inherent, even though that's been on the books for a while, certainly in the EU, et cetera, for some time, the challenge has been institution B still needs to fully KYC you, which means then I have to redisclose all of this information. What the CFPB did with 1033, among other things, is to say, you, Elaine, own your personal and financial data. You have that right. You should be able to take that and be able to port that. So if I want to engage a fintech application or a non-bank financial service, I should be able to enable that because I own that data. I think it's a great unlock, because precisely the use of decentralized identifiers and digital identities really help unlock that and enable technologically what 1033 is trying to do with open banking. So if I want to go from institution A to institution B, I can do that because I own my personal and financial data. And if I can wrap that into a credential that's shareable securely, not only do I own it because I can port for open banking, I can do a lot of other things. I can attach those credentials for transaction tracking. I can radically reduce fraud in that context, because identity theft, I'm not going to say it goes away, but when I have to do a quick peer-to-peer transaction from wallet A to wallet B or account A to account B, I could do an instantaneous verification. Those are huge. Travel rule compliance, bank to bank transfers. I no longer have to disclose the personal and account data of these individuals. I can just provide the credential. So this form of digital identity plays a central role in, I believe, unlocking what 1033's promise is. Can it be refined? Can there be certain data protections that are refined? Can there be certain protections for bank versus non-banks? Absolutely. But I was a fan of seeing it come to play, because I think it's a step in the right direction on a net basis.
Mm-hmm. So 2 questions. What steps should we be taking then to ensure that new compliance regulations don't stifle innovation, particularly in DeFi and Web3 environment? And what's your sense as to how the compliance function will evolve within traditional financial services providers? What does that look like in 5 years?
Yeah, absolutely. So just to take it kind of quickly in reverse, I think getting back to the very first statement, all financial crimes compliance, anti-money laundering, know your customer, et cetera, come down to that single, do you know your counterpart? Do you know your customer? And at the core of do you know your customer is, can you verify and validate the identity? And in an online and digitally native context, digital forms of identity now play a central role. So that's the first answer to that second question, which is, I believe that we are moving toward, and we should be moving toward, a space where the use of secure, digitally enabled identities, tokenized forms of identity, decentralized identifiers, verifiable credentials, and the like, are at the core of anti-money laundering and financial crimes compliance, because you can associate it with transactions, services, products, and it actually enables KYC adherence, ongoing monitoring adherence in a much more automated way, right? And then we can apply machine learning tools, advanced analytics tools for transaction analysis, for behavioral analysis, to understand suspicious transactions and activity and the like, both for identifying illicit activity and, importantly, identifying ways to proactively serve your client. If I can put them in a small dollar loan because I know their expenses over the course of time vis-a-vis their business, then I can put them in products and services that better enable them. These are all things that I think identity can be at the core. So that's the second. So to your question, I believe that's the place we move from a compliance modernization perspective. Now, the reason I answered that first is because the first part of your question is that what can government and what can the private sector do? We have, through things like 1033, advanced some of these pieces on the regulatory side. There are provisions for KYC passporting and reusability within the context of both the Stablecoin Act, which is pending, which passed the House last year and is now pending for the Senate in this new Congress. There's going to be some reformations there. There are a couple.
Can we just stop on that? Can you just explain for folks what the Stablecoin Act is?
The Stablecoin Act is specific to dollar-backed, digital assets, vis-a-vis form of cryptocurrency that is a payment product that basically the Stablecoin Act is saying who could be the authorized issuers of stablecoins, and then who can and how can they be transacted as a payment instrument in that regard. And there's a number of forms of digital forms of value. That's why I just want to point. So like cryptocurrencies on the whole slew of forms. These are specific to backed stablecoins, and in this particular case, U.S. dollar-backed stablecoins, of which the vast majority of stablecoins issued in the world are actually U.S. dollar-backed. But you could have gold-backed, other asset-backed tokens and forms of value. So that was refined because folks thought rightly that we could advance legislation and enablement in the use of stablecoins as we think about the full regulatory footprint for digital assets more broadly, which has security implications, CFTC implications, payments implications, and the like. So there are KYC passport provisions being thought through in this regard. Folks like French Hill, who are coming into leadership at the House Financial Services Committee, folks like Foster, who is very, very seized of the issues around digital identity, are now coming to the fore. And even so, you've got both Republicans and Democrats, those that are very conservative from a security perspective, as well as progressives that care about consumer protection and privacy, are now coming to a place where digital identity can be a nonpartisan issue. The ability for you to own your identity and be able to permission that for fin services and the like means that exploitation by institutions can go down. That's a huge value add to progressives and consumer protection advocates, and national security implications where tracking and traceability, national security, and in anti-money laundering and financial crimes compliance are also equal met. So I think there's a great convergence around digital identity to add to both the anti-money laundering conversation as well as the digital asset and regulatory conversation. So I think the iron is hot in that regard. And I will just say, look, the incoming administration, political ethics and philosophies aside, have certainly claimed that they're going to be very regulatory friendly to the digital asset community. We'll see. Clock's ticking. I'm very hopeful that that's the case. I'm very hopeful that if there's an unlock this is a purportedly technology forward administration coming in. If that's true, we need to start looking at those technologies in ways that address these risks. So the final thing I will say is that the private sector plays a very, very important role in showcasing not just proof of concepts, but scalable applications, in particular by traditional financial services companies, your banks, your non-banks that are regulated in the fin services side, outside of mainstream crypto, if you will. But traditional banks adopting these technologies, testing these technologies, showcasing how you can port identity from one to the second for open banking purposes, for peer-to-peer payments purposes, for anti-fraud purposes. Those go a long way to showcase how that underlying technology and the use of digital identities plays a direct role that ideally then gets codified in legislation. So I don't believe zero regulation is right by any means. So a regulatory favorable environment should mean smart regulation, not no regulation. There's a reason we have seatbelts in cars, and it's not because Ford and GM and everyone wanted them. They were categorically opposed to them. Seatbelts goes in cars, death rates plummet. There's a reason for it, and this is all good for humanity. And guess what? We sell more cars today than we ever have. So there's a commercially applicable way to do this, but both the private sector and the government have to take a concerted kind of private-public partnership approach to this.
Yeah. So we've touched on the federal engagement, the role of federal regulations, but it strikes me that the role of the state in this digital identity DeFi world that we've been talking about looks much reduced. What is the role of the states as we go forward?
They will still play a pretty massive role. I mean, the United States at its inception with respect to federalism versus state pronouns and control and operations by our founding fathers certainly created a very interesting framework for us today. And the reason why I believe that the states will continue to play a role, because remember, the vast majority of your non-bank fin services around money transmitters and money service businesses are still regulated at the state level, right? And you still have state level departments of financial services authorities that regulate financial services, among a number of other sectors in their state. So we have to contend with those, and they're not always copacetic, right? And you have very forward-leaning states, Wyoming, Arizona, Utah, a couple of others that are very, very, very forward-leaning around digital assets. New York has taken a very proactive and very innovative stance at the Department of Financial Services. Hats off to Adrienne Harris and her team to really sort of to put and be proactive in working with the sector for creating a set of governance principles as well as laws and regulatory requirements for digital asset services. So the states aren't going away that way. I'm hopeful that the states come to a cohesive space where there's consistency between federally mandated regulations, especially with those institutions that are regulated equally by the states and not. The over-regulation, in my mind, is equal parts not just obligations that have perpetuated over time, but the multiple regulators. That's really hard in a federated regulatory environment where investment banks and others have 5 regulators, and commercial banks have up to 3 regulators, and non-bank fin services like money service businesses have 50 plus regulators if they're going to operate in all 50 states. That's a burden. That kind of consistency and clarity through a consolidation of processes would go a long way. And that's where I think efficiency can be had. And then the application of some of these technologies, to get right back to the very first question you were asking around Real ID, that was a federal mandate to consolidate and create consistency as it relates to the security elements associated with your identity card, if you will, among other things. Okay, that has a core good intent. How do we ensure consistency of application and approach at the state level where governance, technology, and applications are going to differ? So I don't think the state issues are going to go away, but we do need to address them from an efficiency perspective.
Great. Excellent. Well, Amit, thank you. We've covered a lot of terrain here. Thanks for helping us work through some pretty complicated concepts and ideas. As we look back on 20 years since the passage of Real ID, I think we're all hoping that it won't take another generation for us to figure out what the next phase of identity management needs to look like. So thanks again for joining us.
No, I appreciate that. And I really appreciate your dedication to the topic. I'm hopeful that what we talked about really reemphasizes the critical nature of the why now, but also in the context of the core national security, whether it's financial system integrity and or exportation of U.S. principles, all the way to combating bad guys. In a digitally native world, identity is core to that, and that's why it needs to service as national security. The final 2 seconds I will put here is that, and this may sound cheesy, but I truly tremendously believe this, especially given the first comment of like my kids. One's identity online is also how we understand one's dignity. And if you have an identity you care about, your identity and how it's not only showcased, how it's used, where it's verified and validated, and what access channels you give. So the ability to provide digital forms of identity that are owned by the holder is a huge movement toward enabling and reinforcing one's dignity. And whether you're an individual or a small business, a woman entrepreneur, an immigrant, that is central. And so identity plays central to not just the core tactical applications of national security and access, but really get down to the heart of dignity. And that's why I feel passionate about this.
A digital identity infrastructure has the potential to put the customer at the center of a user-based system that will help individuals retain their personal data and reduce the risk of fraud, identity theft, and account takeover. And while implementing federal standards for driver's licenses has taken a generation, the adoption of digital identity measures will move much more quickly. The growth of the web economy and web-based models for decentralized financial services will drive this innovation. Thanks to Amit Sharma for his great insights. on the evolution of digital identity and why identity management continues to be a core element of a national security framework. I'm Elaine Dezenski, and this is Coercive Capital on the Illicit Edge Network.